All right, hello there, everyone, and welcome to today's webcast on how to thrive in a trader's market. These days, it sort of seems like how to survive ought to be the title of today's presentation. I mean, today was brutal for a lot of us, I'm sure, and it was pretty broad. Chipotle had a big bad day, and Nvidia, and so it wasn't just tech. I mean, it was a pretty rough session, I'm sure, for not just me. So anyway, we're going to take a look at how we go about doing this, and I think it's going to be informative, and it's something that really does work well. We have made money every single month except for the first one of this year, for example, and we'll see about June. Today really slowed us down, but we usually make money about 8 or 9 months out of every calendar year. With what you're going to see in today's webcast. Make sure that the screen is moving here and you guys can hear me. If you could let me know in the chat, that's often very helpful. But in the interim, I'm just going to suppose that everything's coming across loud and clear. And what I like to do early on in these webcasts is just kind of let you know if you're in the right place. So you're in the right place right now if you currently dedicate or want to dedicate a portion of your portfolio, could be all of, but at least a portion of your portfolio towards short-term trading to grow your portfolio faster. Hey, what's up, Frederick? We need to define short-term here, I think, because that's a pretty loose term these days in particular, it seems. Generally speaking, we're talking about days to weeks when we're talking about short-term here. Now, we do some day trades on rare occasion when opportunity strikes, but for the most part, we're talking really the majority of the trades, several to many days, is probably the very best definition, okay? So what we're going to show is a system where if you stick with us here to the end, that we've been doing for almost 10 years now. And this year is off to a slower start than some, that's for sure. But we're averaging still about 40% annualized average rates of return on the methodologies that you're going to see here today over that 10-year period, okay? So there's been some really great years, there's been some really, really bad years, and of course everything in between. Just like markets on just a typical monthly basis. I mean, that's kind of what you see. Some really good days, some really bad days, but most of them kind of fall right in between, right? So anyway, let's get to it. So my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. I've been with VectorVest now going on my 23rd year, 23 years I think in October of this year. So it's been quite a journey. Learned an awful lot, of course, along the way from some very, very important mentors that I've had. And boy, it's just been a lot of fun. I am just a small part of a very highly educated, well-informed team of educators here. And we all take pride in delivering the best stock market guidance you can get anywhere at any price. Today is certainly not going to be an exception to that rule, as what you're going to see here today. There might be some decisions to make, but what you're going to see here today is, of course, free, which is the best kind of education, right? And, what you're going to learn, I'd say it's probably going to be about 30, 35 more minutes, something along those lines today, is you're going to learn that you're going to need the right tools. The right tools are inevitably what's going to get the job done, and they're going to help you adapt and thrive, or even survive. Like the past couple of weeks, we've had a pretty rangy sideways market, and if we're not careful, that can gobble us up. So we'll learn a good bit about that today. All right, so let's get on to it before we talk about what we've learned. We'll get over in here. All right. Did you guys have trouble hearing on the GoToWebinar side of things? That's unfortunate. So I have readjusted the microphone. At this point, you should be able to hear, which is terrific. And you haven't missed all that much, just presuming that you at least read the words on the screen. So don't feel like you missed out on anything, okay? The only thing that we've really made abundantly clear that's worth repeating is that, in a month like we're having here lately, it should be retitled to How to Survive in a Trader's Market versus How to Thrive. Thriving is pretty difficult when you have a sideways, ranging market, but What you're going to learn here today is a way that, it's built to cope with anything that's thrown at us, and we manage risk very well. And it's a system. These are also important, so I'm going to repeat these as well. It's a system that tends to make money 8 or 9 months out of every calendar year. Okay. For example, the only month that we've lost money so far this year, jury's still out on June, was January. Okay, we've made money February, March, April, May, and we'll see about June. So we're on track as far as that's concerned. In terms of profitability, one of our slower years so far this year, we do average about, neighborhood of 40% annualized rate of return with this methodology. Okay, now this is something that you can do with all or part of your capital. And most folks that are in the room, of which there are hundreds, many hundreds, okay, most are doing portions of their capital. But it is something that folks could do, either way. So what we're going to do is detail how we go about business, talk a little bit about the current market situation, because I think it's very important. And that's probably where a lot of the education is going to be centered around today, is where do we go from here? Because I think we're in that flux situation where you need to be a little bit nimble and ready to go either way, and potentially a pretty big way. All right, so let's get to it. So first thing that we do is we analyze the market. So the first thing is to kind of just absorb the home page, look at what that's telling us, but then we have a tool that's built specifically for helping us time entries and exits even throughout the middle of a day. And it's even more important to us than the homepage information itself, although the homepage information is like your trump card. It's the most important place to start, and then we're going to look for confirmation with that other tool. Okay, so when you come in, let's assume that we're coming into the market 9:30 this morning, and this is what everything looks like. You're looking up at your market timing gauge, you're 2 ticks into the red, you got 2 red lights, and it says you're down. Typically, that means to us we're not buying stocks, almost under any circumstance, and we possibly are looking to go short. Okay, so that is the framework, likely the framework heading into tomorrow, for example. All right, now when we discuss that and then apply it to maybe an even better picture, it might make a little bit more sense. So what I'm going to do is go up to the top here and go to the timing tab, and from there the market timing graph. So we're leaning bearish heading into tomorrow. Now we need confirmation of that. So that's going to be the next layer. This is just setting the stage. Okay. So what I'm going to do is go to 3 months here, and we can look at how the market has been performing. And over the past, 2.5 weeks or so, we're basically sideways range. Okay. Now, we've been trying to cope with this, and we were off to a really good start because we've largely been in mostly a cash to slightly hedged position all the way up until this day here. And on this day here, we bought stocks very early that day, and we bought even some leverage. So we had NVIDIA with leverage, we had Broadcom, we had Super Microcomputer, we had Dell, we had, you notice I'm saying the word had, okay? But we had Chipotle, we had a lot of great potential trades. No worries, Ann. Thanks for chatting in. And they got off to really great starts. Just from that day there, for example, NVIDIA at one point this morning in the pre-market was up 17%. That's NVDL, okay, with leverage. Now, by the time we got out today, we walked away with about 4%. So even with exceptional timing and getting in very early that morning, after we were rising, we waited until we were actually rising above the opening level. Primary wave switched to up that day, okay? So we had primary wave at our back. We had a pretty good start to a day at what we thought was pretty strong level of support, which I would actually draw across here. I try to connect as many of those wicks as possible when I draw my support lines, okay? And that's essentially where you stopped and reversed. So all that made perfect sense. And we said, you know what? We've been hanging out here. It looks like we got a pretty strong floor. We're going to give it a go. And we were off to a great start, really great start. Then today came, unfortunately. And it was enough of a bad day to turn the primary wave back to down. So it wasn't till about 1:30 this afternoon or so, we ended up shutting that campaign down. And a lot of the big money, of course, a lot of the profits had gone away at that pain that we started 2 days ago. So that just speaks a little bit to the survive part. Now, the reason I would say that's probably still the right decision, some of you might think, and it might, nobody has the crystal ball. Nobody knows what's going to happen tomorrow. But what we can do is, look at market tendencies and what has recently happened. And if we look at the two bars that we have here today, that's called a bearish engulfing pattern, okay? And we do a lot of this kind of analysis in the room. We have seen this before. We saw it here, these two bars. And we saw different variations of pattern that aren't quite as strong as the ones that we're witnessing now. So, you had kind of this dark cloud cover that turned into a down day. You had dark cloud cover here again that turned into a pretty nasty down day. This wasn't quite dark cloud cover there because it has to come, close down through the midpoint of the green body. But fairly significant and ominous tones were set in another down day. So where do we find ourselves now? We find ourselves realizing just because it's happened 4 times in the last 3 weeks doesn't mean that it necessarily has to happen tomorrow. But with that, along with the primary wave turning down, we just decided it wasn't worth the risk carrying over into tomorrow. Realizing that if the futures are pretty nasty, we could have given a lot more back potentially. So we're just going to let the coast clear. What we've been trying to do is wait for a break, either up and out with confirmation the following day or down and out of this range. That's going to be your better bet. So we gambled here a little bit, and I think rightly so. We had a lot. This is a recipe that over my 23 years anyway, usually tends to pay off, and it did really big in spades. I have a feeling you guys know that this is options expiration this week. I have a feeling, and just talking with some of my trading buddies here at the office and so forth, we kind of have a suspicion today was a little bit of a blowout day in that arena. There's all kinds of leverage out there now in so many different ways. Even just ETFs have gone bananas. You got single stock leverage now and all this kind of crazy stuff. So on option expiration week, you do tend to see this kind of thing happen, and it doesn't happen on options expiration day as often as it used to happen. Sometimes it happens the day before, a couple days before. So could be the case. Let's hope, because I know many of us in this room want to be buying stocks as often as possible, even when we're trading. And so let's hope that turns out to be the case. But it just wasn't worth the risk, carrying over into tomorrow to see that. So we're sticking with the system, the way it's written. So bottom line, we only like to buy stocks when the primary wave is up, just like it would have been here or here. And we get confirmation that day or the next with our intraday timing model, okay? And so that brings us to the next part. We're going to come over here to a tab called the Derby. This is a tab that, unless you're already in what we call the Jockey Club, you don't have most likely on your computer unless you've paid for it, okay? Now, what it does, it adds some trading components to your suite of analysis information that you have in the VectorVest platform when you add the Derby tab on. And one of those beneficial components is this thing here called the Derby timing indicator, okay? Now what it does is you can see there's a green and a red bar. There's 0 to 2. Above 1 is favorable on that direction. So it's either favorable bullish or favorable bearish. So where did we end up today? Really favorable in neither category. You do have the ability to look at this though throughout the day. And we have some watermarks that we like to see achieved before we look to take action. And it's even by certain times, okay? But the way that this works, you can see the red, this would be like the red bar if you were looking at that Derby tab page, and where the levels were throughout the day there. And this green line would be the green bar and what the levels were throughout the day. So what's the first observation that we make? Well, red was in front of green most of the day. And what did the market do from the opening levels most of the day? It went lower, okay? So what we like to see is actually the opposite if we're going to be looking to buy stocks. And we don't even like to see the back and forth. You don't necessarily see as much, dancing the tango, if you will, spinning around one another before direction emerges. If I go back to 5 days, it might be more helpful. For example, there are days like 5 days ago where it becomes really clear very early that the market is definitely favoring the short side. And so we could take short-sided trades, whether it's through short-dated options, or you wouldn't want to do longer-dated options like traditional options like I normally prefer to do. But you could do short-dated options or take on short positions or buy contras, things of that nature fairly early on this day. Same would be true for the next, okay? And then we had a little bit of a transition in middle of June 17th, but largely, red has been dominating here for the past 5 days. So it hasn't been if you've been trying to slug away buying stocks over the past 5 days, then maybe you're already seeing some benefit here because the market really hasn't been conducive to doing that, aside from the day that we decided to buy, and it was right around in here. And we got off to a great start, and even then, the market just didn't continue to move that way. And that, of course, happens. All right, so that's the timing components. So what are we going to be looking for tomorrow? We'd be looking for this green line to get up above the red and go above this upper dotted line of 1.2, just like it did a couple days ago, and see if maybe the market can get off the ground this time, realizing each time we come down, test support and hold, you got an even stronger support level, okay? The best bet, though, we'll probably just nibble at stocks on that occasion. We're not going to go full on 100% buying power. We'll start buying a few stocks if that's the case. But if at some point over the next few days, if you will, and we start to bust north of about 66.5 or so, maybe even like 66 and about 30 cents or so, we'll likely be adding a lot more powder to the market at that point. And we could do as many as 6-7 trades in a day sometimes, if that's the case. So we'll start small and add as we're more and more right on the direction here as it emerges. Now, the opposite could happen. We've already said, based on at least the last 3 weeks and similar patterns that the market has exhibited over those days, even to follow, the market could head towards the lower end of the range here again. Then we need to see if we're going to hold, and we don't know for sure until you start popping below, say, $65 into the 64s, really. We do have a little bit of support by way of a gap, not too far off in the distance from that level, but then you're really coasting probably south of 63, if that were the case. This would be, I think, the strongest support level that the market has right now at the moment. It would be about 62.85. Okay, and what we have is a market that's flagging here a little bit, pretty volatile. So if we break north, this is the interesting thing about technical analysis, is you can learn a lot just from the price behavior here. Like a number of you might be saying, well, we're on a double top. Well, you're not yet. The only way you know you're on a double top is if you break the interim low, okay? But if you do, so this is the kind of stuff that we talk about and teach and things. You're likely going at least that much lower. They tend to overshoot, okay? Just like if we break north of this flag, it's going to be the same height. That's kind of your expected breakout. I'm not sure if I can put that on. Yeah, I can. So that'd take us up just south of 70, but again, they tend to overshoot, and we might be looking at, when we talk about all-time highs in VectorVest world, we track 9,000 stocks, and we take out all the price weighting and market capitalization weighting. and all of that stuff that, and you've seen, I think, recently why, NVIDIA and Microsoft and Tesla and all this, are kind of clouding the picture. Markets are talking about hitting new all-time highs. And while that's true for, let's be honest, 20 to 30 stocks probably that are really driving this market, it's a whole different ball of wax for everyone else. So this is a better depiction of actually what's really happening out there. Markets really aren't performing quite as well as that would indicate. Okay, now those stocks are, right? Which is why we were in Chipotle and NVIDIA, and Broadcom, and so on and so forth, because that's where you want to be if you're going to be anywhere. All right, so hopefully all of that makes a little bit of sense, and I was able to paint the picture for you so that even if you don't decide that you want to be a part of our group, you have at least some idea on what we're looking to do and why, and if that makes any sense to you or not at all. And I'm fine either way. Not all of us like to trade or attack the markets in the same way all the time, right? So I'm sure there's investors in here, and this is like total Greek to some of you folks, right? But if you're a trader, I think you now understand that we have an idea on what we're doing here, and it's based on sound traditional things that tend to work very well. What we do is on top of that, we layer in the VectorVest advantage, I would say, with the Derby timing indicator along with primary wave in terms of knowing when to execute on those other observations that we're making, okay? All right, so with that, that's the timing aspect. Then what it comes down to next is stock selection, right? So in terms of stock selection, we have that baked into this tool here as well, but we do use kind of the entire platform when making our decisions. So what I'm going to do, because hopefully you're well aware of the remainder of the platform where you've got some great stocks right on the homepage, for example, we often look at those graphs. What I'm going to do is just leverage the Derby. And what you see here at the top is maybe some funny names to some of you that aren't well versed in VectorVest quite yet. But each one of these funny names represents a scan in VectorVest that you can run to find a list of stocks to potentially participate with, right? So when we see the one at the top, it says worst performing Contra ETFs. So immediately we know this is a Contra ETF search. And then if you know anything about Contra ETFs, or even if you don't, I'm going to tell you a little bit, enough to know this much. They go up when the markets that they represent go down, and they can be at a factor of 1 to 1 or 2 to 1 or 3 to 1. So you can even have leverage. And that's why something like this is often outperforming even just bearish strategies, because they are leveraged up. Okay, so if I click on one to open it up, you can see what's inside. For example, NVIDIA short, whether it was sort of the single leverage or the triple leverage, that was one of the better places to be today. Now, I would never advocate for that. I would never advocate for shorting the very best stock in the stock market, even if they are maybe a bit overcooked. But it does offer up opportunities like, FANG Plus, tech, semiconductors. So I see a lot of tech, a lot of semiconductors, and kind of the FANG stock arena were some of the worst performing markets today. Okay, or best performing markets if you're short or long these instruments, because you don't have to short when you do these. You can buy them long like a stock. And if the FANG stocks went down today, and there's some other stuff thrown in here with BMO Rex, but largely FANG stocks, okay? If they go down as a unit today, this goes up. And in fact, it went up to the tune of about 4%. So you can buy it, and if the stocks go down, your fund goes up, right? Then you could sell it or stick with it for the next day, so on, etc. Looks like this, I think this is Tesla down here, this TSDD, if I'm not mistaken. So they're in the mix here as well. Then you've got this one here. This one is, often there's a lot of overlap. Sometimes there's some small differences. I'm not going to go into the depths and reasons as to why we have two. It's just going to create confusion. But basically, Contra ETFs were a good bet today, really no matter what you decided to do. Even the ones outside of these lists all tended to have a pretty good day today. But the importance of this is, you can see the performance here early. And so there was opportunity that this was spiking early. You wouldn't have felt great about that decision for about the next half hour to hour or so, but then they really took off sort of right around that noon time frame, which, as I mentioned, happens to be about the time that we shut our long campaigns down, right? So it's no coincidence, because I'm looking at all of this information in here, and things like the Derby timing indicator had switched, around that time frame. Okay, all that being said, we also have shorting strategies. And here again, these kind of scans here, anything that's where the stocks are peaking, really best suited for the more advanced traders that are in the group, because you don't want to be short these kind of great caliber stocks for very long if you don't have to be. So you can keep scanning down the list, but here were some of the very best sort of runaway stocks for shorting in today's market. And again, we could have found out about them pretty early in the day, plenty early enough to profit here if we decided to try to do that. Often, for the benefit of most of the people that I talk to who are not ready for that kind of, that kind of experience, a lot of people think they do until they do that and realize, boy, if I don't get this market timing right, I'm in big trouble quick. There are better ones. So you can change the selector up here at the top. You can just focus on the bearish strategies, and then you could move to something a lot more, easier to cope with. The returns aren't going to be quite as dynamic, but you can go with more so stocks that are already on the way down. Now, what this tool is telling me, however, is that most everything that really took a beating today were stocks that were peaking. All right, so again, that kind of reinforces money just kind of coming off the top, profit taking, and possibly, a little rotation, things like that. So that's actually pretty good. One of the ones that I wouldn't want to see up there is something like worst stocks over 10 or worst stocks above 20. These are some of the worst stocks, which are typically the ones that you want to go short when markets are falling, because they are literally the worst stocks of the 9,000 that we track. Okay. So yeah, I mean, the news could have been a lot worse today. So maybe that's comforting to some as we head into tomorrow. Okay. So there's a lot of information that you can glean from this tool, an incredible amount of information, and you can do so very, very quickly. I don't want to go too far into the depths of this stuff over here to the left, other than to say there is some very, very powerful stuff that can be done here. So instead of just looking at today's data, for example, if I wanted to get a better feel for what kinds of strategies have been working the best over the last, say, 3 months, instead of just what's been working the best today, all I've got to do is change our mode of analysis. Okay, so what I can do is something like, what if I bought from any strategy, just the top 10 stocks on any day for the last 90 days, which usually is about 60 some odd trading days, okay? So the 90 is calendar. Yeah, 66 trading days in the last 90 calendar days, okay? So this might surprise some of you, but even when we include all searches, both bullish and bearish, you do have a couple of strategies that have been outperforming that are bullish at the very top, but then you run into a bunch of bearish strategies pretty quickly, don't you? Right? So pretty tough. Again, that speaks to the few stocks. When we talk about best performing ETFs, again, you're talking largely about markets being represented there, and that's situations where, again, NVIDIA and everybody else is kind of helping those market indices along, or the segments that, even like the SOX, the segments that they represent. Cryptocurrency had been performing pretty well. So the halving, these stocks really got beat up severely in the halving, because literally what they're mining, their assets that they mine got cut in half. Largely that event is over, and so a lot of what you see here with cryptocurrency stocks, as opposed to the actual Bitcoin index and so on, is these stocks are kind of regaining some of that ground now that that event is over. Okay. But anyway, you came here to learn more about how to do things than me tell you what's going on. So, some of the better bets as we come down in the long arena: Smooth Comfort, great little search. It looks for persistently rising stocks to begin with. Guess what? They've been kind of where you want to be. Biggest bargains, big stocks. So here's a list of potential candidates, and you can just focus bullish all the time. You need to wait for your indicators and everything to line up. And if and when they do, these are going to be some of the best scans in VectorVest on a go-forward basis. Why? Because literally, if I click on one of these, I can see that, all right, on the whole, it's been picking a whole heck of a lot of winners out of these 10 stocks on just about any day that we want to look at, okay, until very recently. And then, you can get a feel for that kind of performance. So when we get to a Smooth Comfort, you got 80, 90, 70% winners on just about any day. The further you go back, something like this, often the better it is, right? So the closer we get to the end of the tests, which is today's date, for example, the performance is not going to be quite as strong because they don't have as much time to do what you want them to do. But Smooth Comfort has been a very good bet. Anybody that's attended this webcast multiple times this year, hopefully you already know that. Smooth Comfort, the last time I did this webcast was in March, and the recording is going to be of that webcast, so you can double verify that, which will be a cool benefit for those of you that are here live. Literally in March, the last time I did this webcast, I said, if you're going to trade something, use Smooth Comfort. Okay. So that's been an awesome choice. And guess what? In March, I don't remember what day in March that webcast was, but it was probably mid to late March. You guys will see when you see the recording. All right. Look at the number of winners and the percentages. Okay. So this data is invaluable, if you ask me. One of the biggest stumbling blocks that people have when they take out a subscription to our software is there's so much stuff in here, where do I go and what do I do? This tool was built to address that concern. It was built to give you, your best chance at, this is the best performing strategy last 3 months, probably going to give you your best chance for the next 3, and it often does. Nothing is perfect. Nothing works 100% of the time, all the time. I wish stock markets and investing were that simple. I've never seen any technique. Even the guys that just try to sell options for a nickel, they're not even 100% accurate, right? So, what you get here is well above average statistical performance. That's what you get. All right. Now there's other modes. So if I want to desensitize this, that's a little bit stacked. Let's say the market is finishing up right now on a high note. That would kind of stack things a little bit in favor of very risk-on strategies who will take best advantage of that situation. So we have other modes like, say, sliding window. Right? And in sliding window, what I can do is desensitize market direction by just looking at, what if I wanted to buy from a strategy, and typically, I'm not going to be in those stocks for more than a week. Right? Then I can get a completely different list of stocks, unless, guess what? Smooth Comfort is number 2 on any given week. So on any given day, and now on any given week, Smooth Comfort has been your best choice over the last 3 months. And guess what? It was the best choice 3 months ago. Right? Biggest Bargains is probably one of your next best. And Peabody Winners up here, because it wasn't on the other list, I would more heavily weight Smooth Comfort and Biggest Bargains because they were both towards the top of the other list as well. So if you have strategies that make money on any given day, given enough time to be right, or do the best job at getting you off the ground on any given week, realizing once again, markets don't move. Here's your last 3 months. The market is actually lower today than it was at the close 3 months ago. And about half the time the market has gone down, and about half the time the market has gone up. See? And the rest of the time it's gone sideways. So, if you want to, if basically, how cool is the tool now? It's saying, hey, look, that, we're talking about 1.5% returns on any given week on average, even in a market that's not gone anywhere. Okay, so Smooth Comfort again. Can't say that enough. That's going to be a good choice. So that's pretty neat. And then there's other modes here. We more heavily use those two modes in addition to today's Derby than anything else. The other modes have value, but I'm not going to spend all of your time that I don't have to today trying to teach you everything I possibly can. I'm going to teach you the most important stuff. One of those things was, what to look for in terms of market expectation on when might be the next best time to go long. And it's probably not even tomorrow, even if the market does bounce, right? We need to break out of the sideways consolidation, right? So we probably need maybe one more day in addition to tomorrow, for example, for that to happen. Maybe 2, maybe 3, we'll see. Maybe it doesn't even break north. Maybe it breaks south. And of course we said, well, then you probably shouldn't buy anything until we can reassess at a later time. So if I'm gonna go long, then what am I gonna be thinking about going long with? Well, it seems to me Smooth Comfort's probably gonna be a pretty good choice. So I got you prepared for this next turn, right? But then you can see the advantages of having the tool for yourself on a go-forward basis as well, because this information does change. Now, there are certain strategies that tend to be in here a lot more than others, like Seattle Bear Beaters is a strategy that just probably one of my favorite 12. Yeah, it just tends to be in this list more often than it's not. Chappell's Champs, strategy that I made. Smooth Comfort. These are all strategies that tend to be in this list quite often. And there's others, okay? So, pretty cool stuff. Now, all of this to say, if you want to be in a position to where you can have this tool for yourself, and on top of that, also receive coaching on this kind of information so that you know what to look for, and on top of that, hang out with a lot of like-minded traders who also present ideas on things that we can be looking at in trading, and you want to be part of a successful group of people that do this, right? Not just us here, but also what's really cool about our new coaching rooms is you can talk to the other folks that are there, even if you want to do it in private, and see what they tell you. We got people that have been in my coaching room for more than 9 years now. And talking to some of them can really pay off. All right, so anyway, what we're going to do is move back over here, and just quickly recap what we talked about today. So today we learned how to keep the wind at our back on our short-term trades. We learned a stress-free way to evolve with the changing markets. There's no guesswork here, right? We assess the market. We told you how we do it, and it's mechanical. We're not saying, well, I think tomorrow, we should go long. In fact, we said probably not going long tomorrow, almost under any circumstance, because the market's still going to be, if it goes up tomorrow, it's still going to be in a range. Unless it goes up big. Now, if it does that might change. Okay, I'm talking like 3 sigma. So, but not likely, okay? Now, there's no such thing as you can't do this. You definitely can, and I'm going to make sure you do. So the only thing I can't do for you is make you want to. That's your choice. If you want to, we can make it happen. So if you want to make money 8 or 9 months out of every calendar year from now until the end of time, we can help you do that. If you don't want to do that, then I can't make you, and I'm not even going to try. Okay? What we showed you is a way that you can adapt and thrive no matter what the market throws at you. We're even going to give you the coaching to make that happen, and all of it is only going to cost $29. So what we're going to do next is I'll put a link out into the GoToWebinar, folks. I can't do it on YouTube, guys. I apologize. and I'm riding solo today, which is part of the reason. But let me put this out there for you folks. You find folks here and go to webinar. You guys on YouTube, you're already well more versed in the internet and how to get to websites anyway. So it's not very difficult. I'm going to give you the website here in a sec. So for 29 bucks, the cost of an aging Cuban cigar, well, probably not anymore. That was last I left Florida, which literally was, oh man. Yeah, I've been up here, well, 25 years now. That was 25 years ago. They were 29 bucks. I don't know what they are now. But anyway, all you got to do is go to www.vectorvest.com/thrive. You get the point. Those cigars just go up in smoke. Here you're going to learn how to do this. We get together every day in something called the Jockey Club. When you get the Derby tab, there's actually a button on the Derby tab that says enter the room. And if my resolution were higher, there's actually a little red button here that you click. And that'll take you right to the coaching room, okay? You'll also get some emails with some links and things, I think. But just right from the VectorVest 7 platform itself, you can get to the coaching room every morning. We meet, this is New York City, East Coast time, okay? 9 a.m. is when we start. We start because we start to get our homework done before the market even opens. And we stay together until 10:30. So it's an hour and a half every single day. You don't have to go every day. We got people that come once they learn a little bit about how we do things, they're going to know when some of the more important days are and aren't, right? But when you're new, I think it is important to be there as often as possible so that you get to that level, so that you come up to speed with those guys. Anyway, 29 bucks, less than $1 a calendar day. Let's see, there's as many as maybe 25 trading days in a month. Just kind of depends on the month, right? So just over $1 a day for this kind of coaching every single day. Probably worth it. I'm not going to say it is for you. You got to decide that for yourself, okay? But I've been doing this very successful. VectorVest has made me a millionaire. It can do the same for you if it hasn't already. And, I enjoy giving back at this point. So just want to thank everybody for being here today. It's what I love to do, help others. And hopefully some of you feel the same way. Get some like-minded people in this room. Boy, it's going to be a lot of fun. All right, so I don't see very many questions. If you have some, I'll try to stick around here for another 30 seconds or so just to make sure, give you a chance. But if, not seeing any, that's all I've got for you today. That's all I've got for you today. It's a tremendous offer. I think it's one of the strongest offers VectorVest has ever put out and probably ever will. 29 bucks for learning a lifetime of opportunity in a month. That's definitely worth that. It's definitely worth that. All right, let's see here. No questions. All right, guys. Thanks for coming in today. Hopefully things start to turn around tomorrow. I wouldn't necessarily bet on it just yet. Again, I'm seeing an awful lot of repetitious type pattern here. So it's true. At some point, patterns are broken. Is tomorrow going to be the day? I'm not sure. But I'm not really going to be looking to seriously buy a bunch of stocks again until we get up to 66 and a quarter, 66.30 at the bare minimum. I'm willing to contend with a little bit of upper wick, particularly on such a wild day. But what I don't want to contend with are all these opens and closing levels that are all right around. We'll see you. We'll see you soon. Good luck out there, okay? Try to give you the best I could. We'll see you soon. Good luck.